Hello, I'm Kate Taylor of Taylor & Co Estate Agents, and I'm absolutely delighted to be joined by Chris Collins of CC Mortgages. Thank you for joining us today,
You're
Chris.
welcome, Kate. Thanks for having us.
I've asked Chris to pop in and have a chat with me because when my team and I are out and about, we're asked loads of questions about mortgage advice and what people should do about purchasing a property or buying an investment home. So Chris is in partnership with us. CC Mortgages use our office space here in Abergavenny, so they're fully available should anyone require any independent advice. They're here in our building. So, Chris, thank you for coming in to chat with us.
You're welcome.
So I thought it would be useful, before I go into all the questions all of our helpful followers have been sending in to us, just to give a bit of background information on what the market is like at the moment, because with lots of financial information coming up with the budgets, which is happening just around the corner.
Yes, indeed.
We're getting asked lots of information about what's happening with the market. Is it going to rise or is it going to fall? And I wish I had a crystal ball that I could answer all of those questions. But what I'm experiencing here in Abergavenny is normal market conditions. So it's very difficult to make the market fall. If you look at the last 64 years, you might be surprised to know, Chris, that the market has only fallen 15 times in those last 64 years, and some of those have been when we've been at war. So yes, there's a lot of worry and unrest about what the market is doing, but actually it's a normal market. And for houses that are priced correctly, they are still selling. And here in Abergavenny, we've certainly had our busiest last financial quarter, which is great as we go into Christmas. So if Chris can bear with me, I'm going to go through all of the questions that our followers have posted in, and it's really great that you've engaged with us. So thank you very much. So one of the main questions I'm asked all the time, Chris, is I'm with my bank. I've been with my bank for years. Why should I speak to an independent mortgage advisor?
Great question. So basically, as whole of market mortgage advisors, we have access to over 100 different lenders, basically, Kate. So sometimes it is in the client's best interest to stay with the existing lender for a number of different reasons. If they're tied into their fixed rate, they don't want to pay a penalty to leave, all that kind of thing, which does make complete sense. But what a lot of people don't understand is even if you stay with your existing lender and you're moving property, it's still a brand new mortgage application. The lender will still go through affordability assessments. They still will check your credit profile. They still will check the new property. So it's always worth having a second opinion and speaking to an independent broker, because if it is the right thing for you to stay with your existing bank, we will tell you. If it isn't, and you can benefit from better rates, better options, you've got that benefit as well. So we always say to people, bit of a cliche, but your mortgage is largely your biggest financial commitment you're ever going to take out in your lifetime. So we always say to our clients, why wouldn't you get a second opinion? People shop around for their other things in life, such as the car insurance and home insurance, but when it comes to the mortgage, they think that, we need to just stick with our lender and just not rock the boat, so to speak. But we're here to help, basically, and obviously here to help you guys at Taylor & Co.
Oh, that's great. And it's certainly very true that I can tell when someone walks straight through the hallway of a house, they're genuinely making a commitment to purchase it as soon as they've walked through the hall. And we probably spend more time choosing a car than we do a property. So Chris is absolutely right. Take the time to do your research to make sure you get the best financial advice. So lots of our buyers that we come across are second steppers. And what I mean by that is they've purchased a property before. So some of them have got some idea of what to do. But equally, we come across first-time buyers that are either living at home or in rented accommodation. So Chris, is it a good time for first-time buyers at the moment to take the plunge, would you say?
100% yes. Speaking to the lenders that we have access to, there is a huge push by these lenders at the moment to try and help people make their first steps onto the property ladder by incentivizing with some fantastic schemes. One lender in particular I know offers a 6 times income multiple purely for being a first time buyer. And what that means is it tends to bring a lot of other properties into play that a first time buyer might think, that's out of my reach. But actually, when you speak to us and we go through an affordability prediction of how much you can potentially borrow, all of a sudden they can borrow what they need and a certain house of their dreams comes into play. So 6 times income of first time buyers is a huge boost.
Incredible.
We've got another lender who offers a mortgage for first time buyers only by only contributing a £5,000 deposit, not 5%, £5,000. A stumbling block for a lot of first-time buyers is, as you know, deposit and finding that deposit. Where is that deposit going to come from? But one lender in particular, with competitive rates, offers first-time buyers the ability to get on the property ladder by just contributing a £5,000 deposit. So to answer your question, yes, now is a great time. There's some fantastic schemes out there for first-time buyers. So get an initial conversation with us, put in a meeting, and we can talk through what your needs are and how you can get onto the property ladder. But yes, definitely a great time.
Now that's got me thinking, because I've got, those that know me, I've got 3 adult children, and they're all just about to think about what they're going to do with their housing needs. So what if they're a first-time buyer, what kind of information do they need to turn up to the meeting with? What would be helpful to get that off the ground?
So great question. So basically what we do here at CC Mortgages, once you introduce us to your clients, we will have a introduction call with them. So during that introduction call, it's very relaxed, and we'll go through what their needs are, what their home buying goals are, and ultimately we'll try to help the clients achieve those goals. On that call, we will talk through what you need to bring with you to your first appointment. Ideally, we like clients to send over the information in advance. So simple things like proof of income. So if you're employed, typically what a lender is going to look for is your last 3 months pay slips and your latest year's P60 if you're employed. A common myth out there is that it's very hard to get a mortgage if you're self-employed. Simply not the case.
Yes.
We specialise with a lot of self-employed clients, and we're able to get them a mortgage, whether you're a sole trader or you're a limited company. We're just going to need company accounts, tax calculations, all those type of things. Bank statements, so your latest 3 months bank statements, the lender's going to want to see. Something we always really tell our clients to focus on is getting a copy of their up-to-date credit report. That is vital, because that's something a lender will do. They will credit score you, and a lot of people, particularly first-time buyers, don't know what their credit looks like.
How do they do that, Chris?
So the best thing to do, if you literally log on to a website called checkmyfile.com, it's completely free for the first 30 days. And what that does is it literally allows you to download your credit profile and how lenders view you. It's a fantastic tool. We insist all of our clients bring that with them before we submit a mortgage application, so we can see exactly what the credit profile looks like. If there are some blips on there, which sometimes we find there's some blips on people's credit files which they weren't aware of, we can advise how to amend them to get the mortgage ready. So sometimes we send clients away, look, there's a few blips here, go away, do X, Y, Z, and then they come back to us in 3-4 months and we're able to get them the mortgage. So that's really important, getting a copy of the credit report as well.
And I suppose that thing changes over time, doesn't it? So what you shouldn't do, and I often hear Katie, I should point out, when Chris said that they're very approachable, this is true. There's Chris, Katie and Dom that come to our office to meet our mutual clients. But one of the things I've heard and picked up on what Katie has said is don't go and buy a car when you're in the middle of a mortgage application. So Chris will probably explain why that's the case.
Absolutely, yeah. So it's really important when you are looking to take out a mortgage. A mortgage is obviously a loan, technically. It's a financial commitment. What a lender is going to do before they approve that mortgage loan is they're going to assess what other commitments you have in the background, such as car loans, car finance, credit cards. So we've had it recently, only a few times, but we've had it recently where we've had the mortgage approved for clients, which is fantastic. And then, like you said, that Katie's had it, myself's had it, Dominic has had it as well, where then we find out later down the line they've taken out some car finance or they've put some large purchase on credit. We always strongly advise, do not do anything like that until you've got the keys to your home, because typically a lender will still credit score you before they release the funds for the mortgage. And if they see your financial circumstances have changed, they can withdraw the mortgage offer. So getting a copy of your credit report and staying on top of your credit is so important, but that's something we will help and advise on through the whole mortgage journey.
And that's good to hear, because it'd be easy done, wouldn't it? You just wouldn't realise that making a purchase that you would generally do every 3 or 4 years, such as a car, you wouldn't think not to do it. So great advice from Chris there. So coming down to what they need, and then how much of a deposit do buyers generally need when they're purchasing?
Great. So there are lots of different options, again, for not just first-time buyers, but home movers, but particularly first-time buyers. If they're struggling for a deposit, it can come from a gift. And that we see a lot of that with first-time buyers. So a gift from a family member, typically parents. Sometimes it can be a friend. We've got some lenders will accept a gift from. So simple with that. We'll talk you through the whole process, but a gifted deposit letter is sufficient. That is filled out by the gifter to say, I am gifting a non-repayable gift on the sum of money of this to my son, daughter, whoever. And then we just need to see the source of those funds as well. So where those funds have come from. So a gift is one way. In terms of the amount of deposit, it can be anything from 5% up to whatever you want to put down. Typically, the more deposit you put down, the better interest rate you're eligible for. So, the maximum kind of loan to value, it's called, is 95%, which means the lender could particularly stump up 95% of the property purchase price, and then you only contribute 5%. There are some lenders we've got access to, you might have seen it in the press recently, who are now offering a 100% mortgage. So literally no deposit required whatsoever. There are certain criteria bands you need to fit in terms of income and credit and all that kind of stuff. So there is that option as well. But if you can contribute some deposit, then you're going to be in a better position in terms of getting your mortgage approved. And like I said, that £5,000 deposit for first-time buyers is proving quite popular with a lot of our clients at the moment, because it's helping get those steps onto the property level.
And I think that's worth just remembering that CC Mortgages have access to quite a broad range of lenders, don't you? As opposed to your existing bank that is just your bank. Chris can explain that you have access to quite a few people.
Absolutely, Kate. Yeah, so we've got access to over 100 different lenders. That's why a lot of people use us to get a second opinion. Going direct to your bank might be the best option for you, but obviously if you are going direct to your bank, you are simply only being eligible for that bank's products, that bank's criteria. It's amazing. It still staggers us really how many lenders will treat the same amount of income and the same applicant differently compared to others. So some might use certain incomes where others might not. We've self-employed people. We've got some lenders will use salary and dividends, for instance, for income. Some will use net profit and salary, and that can be a huge difference in terms of how much you can borrow. Some lenders change how they value overtime and commission. Some will use 100% of that. Some will use 60% of that. So lots of different criteria, but we've got access to every lender on the market. So that is something our clients really benefit from, enjoy having that second opinion and making sure they've got the best possible mortgage product. So yeah, I always encourage people to get a second opinion.
And I think, given what you're just saying, it sounds mind-boggling the amount of things that you look at and consider when trying to give people advice on the best product for them. So then we also deal with not just first-time buyers, but second steppers, and those people that own a property already and they're looking to move up market or across market. And when I'm out valuing their property or I'm meeting them at viewing appointments, they often say to me, I've got an existing mortgage product and I'm just going to, they use a different terms of how they describe it, but I'm porting it or moving it across to the next property, which is perfectly fine. But why might it be worth considering other options, Chris?
Absolutely. Good question. So again, porting is a typical term. It's called transporting your mortgage to another property.
Oh no, I never knew that. I wonder where porting came
transporting,
from.
Porting, so it's literally transporting your mortgage from one lender to another. The common myth, again, what a lot of homeowners think is that by staying with your existing lender and porting the mortgage, you can just transfer that mortgage. But actually, the reason you should use an independent broker like ourselves is that it's still going to be a whole brand new mortgage application, even if you're porting the mortgage, because the lender's going to want to see what your income looks like, what your credit report looks like. So they're still going to assess your circumstances. So it's very important to speak to an independent broker like ourselves, just so we can make sure that porting is the right option for you. There are lots of benefits of it, but it might be to your disadvantage if there's better products out there and there's a lender that might lend you more money. For instance, we had it recently where a client wanted to port their mortgage, but they couldn't quite borrow that extra bit that they needed to buy their forever home, if you like. So they came and spoke to us, and we went through an affordability assessment with another lender, and they could borrow an extra £50,000-60,000 with exactly the same income they declared to the other lender. And this one lender said, yeah, based on that, we can allow you to borrow £60,000, and all of a sudden then they could buy their forever home. So that was a perfect example of why porting the mortgage wasn't in their best interest then, because they couldn't quite borrow what they needed in order to get their forever home. So it's always worth just speaking to us, and we will go through all the options and what is best for you. And if it is the right option in terms of transferring the mortgage, transporting the mortgage, then we'll say that is the best option, but it's always worth just speaking to someone, making sure you're making the right decision.
Yes, absolutely. So here at Taylor & Co, we like to monitor sales once we've agreed them. So we market properties for sale, but then we stay with the vendor and the purchaser right the way through to completion. Now, I've noticed, and I've been doing this a long, long time, because I'm a bit of an old duck, but it takes longer these days for a transaction to get over the finish line. So for offer acceptance to actually completing, worst case at the moment can take up to 6 months, which is extraordinary. So what I'm discovering more and more is someone has their mortgage approved, they've gone through all of the options with you, they've got their mortgage approved, we're going through the conveyancing process, and the expiry date of the mortgage is getting closer and closer and closer. So that's why I like working alongside City Mortgages, because you're on hand to give advice. But we also deal with other lenders as well. So when we're getting close towards the end and they're worried that their mortgage offer is expiring, what should we be saying? Or what do you advise them, Chris?
Absolutely. So that's the benefit again of using ourselves with you in making the whole process joined up, is because we won't just arrange the mortgage for you and say, congratulations, here's your mortgage, we're not going to speak to you again.
Yes.
We like to take our time and take pride in looking after our clients and nurturing them all the way through the property journey and the purchasing journey. So for instance, Katie had a perfect example not so long ago where their mortgage offer was due to expire, and she proactively contacted the lender to request an extension.
Yeah.
So that's something which we can do as the brokers. We can contact the lender directly and explain the circumstances and reasons why we might not complete within the 6-month window. So that's something I should add, really, that most mortgage offers are valid for around 6 months. Some lenders can offer an extension for that up to 9 months sometimes based on your circumstances. But again, speaking to us and allowing us to help you for the whole journey is really important. So if they are coming to the end of their deal and they're worried, give us a call. We can speak to the lender on the behalf and try to apply for that extension. And in certain cases, we've had 1, 2, 3 month extensions that have allowed the completions to happen. Worst case scenario, if the offer expires, it's not the end of the world. We can still put a brand new mortgage application together and make sure it's a nice slick process. So the client feels valued and feels supported all the way through the whole journey. So for us, we're not just going to get them the mortgage offer and then say, right,
leave them
over to you. We're very much hands-on here, and we will make sure we're here all the way until they get the keys to the home.
And I think that's what I'm hearing a lot from you during this interview, Chris. It's that you're there to support people, give them all the information that they need to make an informed decision, but also be with them when things do go wrong.
Absolutely.
But also, they're not on the phone during their working hours trying to ring up and say, I need to sort this out, my mortgage offer's expiring, or what do I need to do about my different options? Because they can just buzz you across an email, and then you can pick that up and find out all the information they need, so they're not having to get stuck into it whilst they're busy at work. So basically, you're taking the weight off their shoulders, really, aren't you?
That is what we're here to do, technically. Is it can be a lonely journey as well sometimes, and quite a daunting journey if you have never done this before. So having that extra layer of support, I think, is really important. And if you look at all the feedback that we have from our clients, it's all very much the same kind of standard of feedback, which is thank you for all the support and that value added and that extra step you go to make sure that they feel supported. So we do take pride in that and making sure that's a big part of our business model.
I'm going to pick you up on that point now. This isn't one of our follower questions because I've only got one more of those.
That's fine.
But I have just noticed that you've joined an independent review scheme, which is the Esters. And that's a fantastic scheme because you can't influence what people say. So basically, you're giving them a code to say, what did you think of our service? Please write me a review. And I think it's the same choosing an estate agent, where you choose to go on holiday, choosing buying a car, you would always look at a review. And choosing an independent mortgage advisor should be no different, should it? So what do you think of the Esters then, Chris?
I'm a huge fan of the Esters. So recently joined. It was through yourself, actually, who recommended us to join. And it's only been a month or so that we've joined, and already we've had an influx of people reviewing our services. Like you said, Kate, it's independently verified. It's verified by customers, and that's what we take pride on, is is getting that customer feedback. And it's what makes us tick, because it's not an easy job sometimes, whether it's quite complex cases and we have hurdles we have to overcome. But then when you get that positive feedback, I'm sure you can relate to as well, people thanking you for your service, it's what makes us tick, really, and it
Oh,
really gives us that sense of warmth and
oh,
realizing
glad.
why we do what we do. So yeah, I'm a big fan of the Esters, and hopefully we're going to be at the award next year,
Oh, I look forward to it.
and yeah, looking forward to being part of that going forward. Yeah.
Great. So I've just got one question left, Chris, and it's what we're hearing a lot in the press at the moment is, should I wait and see? Should I wait and see? Because what if something changes? What if interest rates go up? What if they go down? What if the property market goes up? What if it goes down? And it goes back to what I said right at the very beginning of our short interview is, if we had a crystal ball, we'd be very happy people, but we haven't. So do you think people should wait and see, Chris? What's your view on that?
It's a great question. I mean, you can imagine, Kate, like you, I'm very much of the opinion, if I had a crystal ball, I could tell everyone what's going to happen with the interest rates. Anyone who say they know what's going to happen is telling fibs. It's not, they don't know.
No.
The general consensus in the mortgage market is that it's a positive sign that interest rates are coming down. As long as we don't have any pending curveballs in the upcoming budget, anything like that, then I'm hoping that we're going to continue to see a steady drop in interest rates. My advice to people who are saying, shall I wait or shall I, go now, is get some advice now, because even if we secure you a mortgage product now, the beauty of you as an independent broker like us is even if the rates come down, we can still apply for that better rate for you. So it's almost like the best of both worlds, really, because the worst that could happen is interest rates go up, go the other way, and you'd be kicking yourself, oh, I wish I'd locked in that better deal. So we're saying to our clients, particularly clients who are looking to remortgage, look, let's lock in the best possible rate now. If the rates come down between now and when you complete, we can still get you that best possible rate with that lender. So it's a win-win scenario, really. So we're saying to people, don't just wait, speak to us, lock in the best possible rate now. If things change, we'll get you that best possible rate. But what you're doing is you're protecting yourself in case the rates go the other way and they go up. So it's all important by getting that second opinion, really, I would say.
And that helps with non-home movers as well, doesn't it? So if someone actually owns a property at the moment and they're looking to get a new rate because their mortgage product is coming to an end, when's the best time for them to contact you?
So we are doing a lot of that at the moment, speaking to a lot of our existing client bank, and we are proactively contacting our clients within 6 months.
6 months.
So 6 months. So if your fixed rate is coming to an end, within the next 6 months, which if you look at your fixed rate end deal, a lot of people are thinking, oh wow, crikey, that's soon. Then have a conversation with us, and we can go through what options are available. And then, like we said, we can lock in the best possible rate for you. If the rates come down, in the next 6 months, we'll still get you the best possible rate there and then. But yeah, 6 months, Kate.
There we are. We can all remember that, I'm sure. I think that's been some really great advice. This is the first time we've done one of these sessions with Chris, and it's come around really because when we were out and about, lots of people were asking questions. So we said, send your questions in and we'll put him on the spot and we'll ask him to answer them all fully for you. And I think that's been really insightful and helpful, Chris. Thank you so much.
Oh, you're welcome.
So earlier in the year, we did do a first-time buyer event where we said, if you want to come along and meet Chris Collins and his team of CT Mortgages, do come in and have a chat with them. And I'm sure early next year we will be running another event. But Chris and his team are always on hand, both digitally and in person. So they're not just at my office here in Taylor & Co in Abergavenny, you're also at Moon & Co in Chepstow.
That's right. So we've got an office in Chepstow as well, Moon & Co, so we work in collaboration with them. But we also offer appointments during evenings as well, even weekends as well. We appreciate people work, so what we do is we offer appointments to fit in around your convenience. So for instance, tonight I've got 2 appointments after 6 p.m. via a Teams call, because that's when people fits for them. So we're able to be flexible for you guys. So whether it's in Taylor & Co, Moon & Co, or at the beauty of your home, we can come to see you, or Teams. It doesn't matter, whatever works for you, really.
Oh, so you've all met Chris now. You can see he's quite approachable. He's got a wonderful team. We're really pleased to have them being in partnership with us, being part of the offering here at Taylor & Co in Lion Street in Abergavenny. So do keep those questions coming in, because I'm sure we'll put Chris or Katie or Dom on the hot spot yet again. So thanks, Chris, for coming in. And keep following all of our social media channels. We're on Facebook, Instagram and LinkedIn. For expert advice, get in touch, 01873 564424, and hopefully we'll catch up with you soon. Bye for now.